Right now, I believe this is the buying opportunity potentially of a lifetime. I feel like personally, we may not get a better opportunity than now until the next few months or so if we are lucky. So if you've been following along on eToro, you would probably have gotten a notification saying that I have been adding to my portfolio pretty hard because I feel like this is the time to be buying. So let's take a look at the charts here. As usual, just before we get into it, none of this is financial advice. But let's see what we're working with. So here is the chart of the S&P 500, the top 500 companies in the US. So this is pretty much the gold standard to understand what is happening in the world. So quite simply, it is just a bucket of 500 of the best companies. So if one of those 500 starts to fail and go down, it will get automatically delegated out of that bucket and it will be replaced with something else. So I like to call this chart here, which I've made, S&P 500 Road to Financial Freedom. So as we can see, the market likes to go up practically in a straight line to the top right-hand corner. Now, I've gotten a lot of shit over the past for this chart. People saying it's going to break down and it's not going to work, especially when we were crashing during 2022. But what do you know? It pretty much held up absolutely perfectly. And I do believe one day it will break down. But for now, the trend is your friend until the very end. So the way I like to look at it is green line across the bottom is any price around that level is extremely, extremely cheap. We did come out of it briefly during the COVID madness, March 2020. And across the top is the red line. This represents where it's getting quite expensive. And as you can see, in January 2022, we were well above that line. So it doesn't mean that we necessarily have to correct. In that case, we did. But you can see in the past, it's hugged the red line for quite some time. And it doesn't necessarily mean it has to crash and correct. So something that is expensive, it can stay expensive for a very long time. So that's why it usually makes sense to be a long-term holder and just dollar cost into the market, trying to get the average of the market. So just kind of buying like every couple of weeks or so. And then the last line is the white dotted line, and I feel like that's where fair value is. So now if we take a look at the chart and we zoom in a little bit here, we had the highs in 2022, which we're talking about, came down, corrected pretty hard, became extremely cheap. If you had bought there, you would be sitting on quite a healthy profit, about 44%. To the top here, that's like a 50% return in a very short amount of time. Quite nice. So now I get a lot of questions at the moment, which is like, hey, the market's broken out to all-time highs. Is this too expensive? Should I wait? Generally speaking, whenever the market breaks out to all-time highs, like it did at the beginning of the year, it's one of the greatest times to buy. Second to that, I believe, is the pullback. So, which is right now. So the reason why that is we've got to have to understand the psychology of the market. So imagine if you were a buyer in here, right? And you went through all of this pain, you went through losses. A lot of novice people, they will be trying to sell either at break even at this price here, or they would have capitulated and sold near the lows and walked away with a loss. So they're sadly, the real novices. But then imagine it breaks out to all-time high. What happens? That means everybody who's ever invested in this asset is now sitting in a profit. And mind you, this is the gold standard. This is the top 500 companies in the world. That means maybe there's like a whole heap of companies as well, individually, that are breaking out to all-time highs as well. So now, what does that mean? That means in terms of psychology, everyone gets really, really happy, right? They got some smiles on their faces. When people have smiles on their faces, what are they likely to do? They're likely to continue the thing that they were doing in the past, which gave them this reward, which was buying. So if they had bought it any other time in history, they would be in a profit. They will be getting a little tick of approval, a little pat on the back. So they're likely to keep on buying into the future. Now, what else are they supposed to be, or what else are they likely to do? They're probably going to start talking to their friends and family, and then so more demand comes into the market. So, yes, at the end of the day, these are companies, these are investments in the long term, where the market will find its true value. But at the same time, this is just like anything else. When there is a price to something, it is all about supply versus demand. So right now is a time where a lot of demand comes into the market. And now the reason why I said the best time to buy often is at the all-time highs because of that reason. Second best is the pullback. But the reason why it's the second best time to buy is the pullback is because sometimes in a raging bull market, we are not fortunate enough to get the pullback. So what happens is the market breaks out, pulls back, tests that everything is all good to go, and then we run again. So as you can see, the market this time around has been fortunate enough to give us a bit of a dip. You can see if we zoom in here, I've got this second green line, which is an alarm clock. So there's a little alarm clock there. So if the market does touch that, I'll deploy quite a lot more capital there as well. And then just follow through with my standard dollar cost averaging into the future. Times like this, like the way I like to look at it is I like to personally just dollar cost or a certain amount like every paycheck forever. Because, at any point in time, if you were a buyer in the S&P 500, you would be in practically a profit. But when the market comes down to these great buying opportunities like right now, I like to sacrifice even more, try and work even harder, make even more money, save even more money, and invest even more money. So that's kind of like my mindset right now. So that's why I'm coming in pretty damn hard into the eToro portfolio personally. Now it's a bit of a guessing game. Usually when there is a pullback in the market, it can be like 1 month to like 3 months. If we look at this pullback here, so what we're kind of looking at is like you had a move up and then you had a move down and then you had another move. So we're looking at these move downs. So if we get a pullback like this previous one here in October 2023, it's like 1 week, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks, right? So yeah, that's about 13 weeks there. But if we're looking at others in the past in the bull market, this one here, 1, 2, 3, 4, 5, 6. Then there's a little bit of sideways here, just like 3 or 4 candles, not much. This one here, it went down 1, 2, 3, 4 weeks, 1 month, and then 5, 6, 7, 8, 9, 10. It went sideways, and then on the 11th week, it broke out and it went on another run. So as you can see, like around like the 12 week mark is kind of like the maximum, really. And you can go back into the past and just count every time. Some are bigger than others, but generally speaking, especially when we're breaking out to an all-time high, the market doesn't correct for that long. So like even a lot of these dips here, they're great examples. So this one here, let's go over it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10. So you're kind of getting the point here. So no one knows, including myself, how long this correction will be. This could literally be the bottom. So that's why I've already started deploying capital. And that's why dollar cost averaging, honestly, for 99% of investors is just the way to go. So yeah, that's my current thoughts on the S&P 500. I really believe it's a great opportunity to come in and buy now. And I love to zoom out because when you zoom out, you really get a good understanding for, the long-term trend. And when you're thinking in terms of a long horizon like this, all of these squiggly lines, they're kind of meaningless. So as long as you're willing to hold for, at least a year on the really, really short side, you're pretty much going to be walking away with a profit because overall, what happens? 80% of the time, the market is actually trending up. Very rarely does it dip. When it dips, it comes down hard like an elevator, but most of the time, it's like a staircase up until the right-hand corner of our screens. So yeah, that's my thoughts on the S&P 500 right now. I honestly believe great time to be a buyer in the market. But as you can kind of feel, a lot of people have been scared by this dip. But in the grand scheme of things, it's tiny. Was this dip scary? Yes, it was. It's scarier than this one so far. But if you bought this dip, you'd walked away with a win. What about this one? This one's a monstrous dip, right? A real big one. But actually, when the market dips like this for a very prolonged period of time, what is it? It's actually a blessing in disguise because it's allowing us time to come in and to buy at a really, really cheap price. So, they're really scary in the moment, but actually, honestly, blessings in disguise, like even the COVID dip. The COVID dip was the scariest dip that I've personally been through. I think, something like this is probably going to happen every decade or so. I would be prepared for something like this to happen in the future, some sort of black swan event that we don't see coming. But, extremely scary in the moment, scared the living daylights out of me. However, if we had been a buyer there, we would have made even more money. So that's kind of the lesson. Don't let your emotions get too involved. As long as you're investing in great assets, any of these companies, in my opinion, in the S&P 500, NASDAQ 100, these big US companies, they're the best of the best. So I believe, if we look at the past decade, they've been performing extremely well. Most likely, I believe this trend will continue for the next decade. And I think as well, like just to touch on it briefly, like before, over the last few years, there was always talks like, oh, the US, they're losing touch, like China's going to take over and all of that. But, I feel like that risk has kind of gone out the window, at least for now, because, China is really struggling their economy. I've heard of, their real estate prices are down like 30% across the nation on average. So I feel like what other country is really as strong and powerful, where they have the entrepreneurial mindset. I feel like there's no country that comes close. And especially for me as an Australian, I notice like a lot of Australians, they have a bias towards the country they're born in. They like to invest in companies from their country. And I think there's nothing wrong with that. But I believe we're in the age of the internet and we need to be thinking with a global mindset. Where is the money to be made across the entire globe? We've got access to the internet, so we may as well make use of it. And that's not just for Australians. I believe that is kind of a bias. Like everyone has like a local bias to what is close to them. So, go for every country. Yeah. All right. That's pretty much everything. Buying the dip real hard. If you've got any questions, post them down below. And best of luck. Stay safe out there.